Starting with crude first, and the Brent crude prices are trading above $114 a barrel today as supply worries resulting from the Middle East tensions outweigh increasing evidence of slowing global economic growth. Shelling along the Turkey and Syria border, hostility between Iran and the West and an impending Israeli election has raised worries over the risks to oil supplies from the Middle East Gulf, keeping the floor under the prices there. There you have marginal gains coming in. $92 is holding for NYMEX, while 114.5 on your screens for the Brent crude prices. The gold in the meanwhile is holding steady at around 1760 mark after 3 consecutive sessions of losses. A stronger dollar and a murky outlook for global growth has put pressure onto the bullion trades. There you have $2.5 of a gain coming in for gold as well, and we have seen some gains for the Indian markets as well as the Indian rupee depreciated. To know more about the gold prices, we now have with us Mayank Khemka. He's MD Khemka Group of Companies, and he joins us on a Delhi phone line. Mayank, hi, welcome to the show. We've seen a lot of choppiness come into the Indian rupee. The global prices have been moving, so has been the Indian rupee. What's your sense going forward now? Is there buying happening between the traders ahead of the festive demand coming in?
Some buying is definitely we are seeing, which was July and August was pretty dull. But September and October we have seen some buying happening, but it's not in great quantity as it used to happen in earlier years. Probably that's more related to prices rather than anything else.
Mayank, previous month when the prices had started to run up, there was a talk that gold prices by Diwali could touch levels of 32,000, even 35,000. Do you see that kind of euphoria still in the industry?
No, I think right now we are in the gold prices is a little bit of a correction phase which is going on, with the prices which had moved into a high of 32,500 have corrected to 31,500. I think this expectation of 35,000 as the prices were for on a year basis, that probably by next year, Diwali, we should see the prices closer to 35,000. In the meantime, I think throughout the year it should range between 30 to 35.
Mayank, what's your sense coming in for the silver prices as well? Because a lot of people have been betting more on silver than in gold. Are you of the similar view?
Yeah, similar. Gold, silver also moves in tandem with normally with gold only. So with silver, we see a broad range between 50 to 55 on the downside, and on the higher side, we could see the prices climbing to 70 to 75,000. When we see the gold at 35,000, silver should be also be around at 75,000 in rupee terms.
So Mayank, are you saying that people can still wait for a dip to come in both these precious metals before they actually start making their investments here?
I think the dip has already corrected. As I told you that the prices have corrected from 32,500 to 31,000, and we don't see a major downside. Maximum the prices could go below to 3,500, but you cannot always catch the bottom. So probably these are more or less good levels to buy, to come in, because the prices have already corrected by around 5-7%.
Mayank, your point is well taken. Thank you so much for joining us. So that's the view coming in from the industry there. Start buying, you could start a scale-up buying coming in there, and of course some bit of a decline is expected still there. Let's also get in then Sumit Bagaria. He's head commodities and currency research, Testimony Commodities. Also joining us is Vijay Bamwani, who's author and CEO, BSPLindia.com. Vijay, let's start with you. And what's your sense coming in for the precious metals now? I mean, we've seen a bit of a support coming in. Rupee has been a major factor. Are you still buying?
Yes, Manisha. Yesterday I recommended a buy. Today I would reinforce that buy again. I would not really mind buying gold on the MCX for the short term at 31,400, 31,425 levels. I would hold these longs with a stop loss at 31,325. My profit taking target would be close to 31,575. The closer it gets to 31,600, I think there might be a short term corrective decline. But clearly there's a buy on dips trade building up here, because oil and gas both are going up due to supply side constraint fears.
Sumit, what's your sense coming in for silver? Is it following gold on the higher side, or do you think the base metals pressure would be seen here?
See, Manisha, overall silver is bullish, but for very short term, for next 1 week to 10 days time horizon, I feel silver should give some correction and it should follow base metals. So for very short term, silver is good to sell at around present levels or at around 62,000 levels in MCX. For that, one should maintain a stop loss of around 62,500 rupees on higher side, and on downside one can expect targets of around 60,800 rupees, and below that 60,300 rupees. This is a very short term target for next 1 week time horizon. Overall for the time horizon of one month or 2 months, I'm bullish on silver. So anytime prices near 60,000 would be a very good buy opportunity for the targets of 65,000 on higher side. But for very short term, I would be seller at present levels.
All right, let's talk about the energy space then. And there has been a turnaround coming in for that one, especially crude there. And Vijay, also for natural gas, even though there are below normal weather being forecasted there, but is it like hedgers buying ahead of the winter session? Is that what is keeping the natural gas prices on the higher side?
Manisha, there's more to it than that meets the eye. There have been reports about Iran having some problems regarding supply. The Iranian oil ministry is now admitted to financial constraints. They are issuing bonds worth $8.2 billion to basically fund exploration process, and unless that really comes into play, there are also constraints on Iran for selling their gas in the international market. And crude oil, thanks to Iran as well as Syria, are basically ruling high. So I think there is a case for natural gas prices to rule higher also. Yesterday, I gave a target of 185, which worked out fairly well for me. And I remember saying, should natural gas prices go above 185, they have a possibility of going to 190, 192 levels. So I would not mind buying natural gas should it dip to 183 odd levels. I would hold these longs with a stop loss at 181. And basically, the first target would be 189, beyond which I think even 194 could be possible should a bear squeeze occur.
And you are long on crude as well because you've seen a turnaround today. Do you think it will sustain the rest of the day?
Manisha, yesterday evening, crude oil prices really flared up pretty well. And I think there is clearly a case for buying the dips. I would not really mind buying with a stop loss at 40 odd levels. I think 49.50 should be in order.
Sumit, what's your sense coming in for the energy space? I mean, do you think, are you long crude as well? Do you think it can hold on from here?
See, Manisha, crude has given a very good upside move because of fundamentalism like problems going on in Syria. But overall, I feel that in the present expiry, as far as October expiry is concerned, I don't think so that crude is very bullish. In fact, after a sharp rise which we saw yesterday, now it's time where prices need to consolidate or give some correction from present levels. Overall, I think Euro USD is weak against dollar and base metals are weak. So because of this, crude should also give some correction from present levels. And on technical charts, I feel that 93.30 is a major resistance in NYMEX. So till the time prices doesn't give breakout below those levels, I feel crude can again come down to 90 or $89 in NYMEX. As far as MCX levels are concerned, I would prefer selling at present levels with a small stop loss of around 4930 on higher side for the downside target of 4830 and below that 4790 rupees in next 1 or 2 days. So I would prefer selling in crude at present levels.
Sumit, how would you want to trade with the base metal space? Because there's a stimulus that the markets are expecting or awaiting from China, and there also is a statement out of Rio Tinto which has downgraded consumption in China going forward. How much of an impact of that do you see on prices?
See, Manisha, as far as crude, as far as base metal view is concerned, I am bearish on all the base metals, especially if you talk of copper, lead, zinc, aluminum. I feel that still there is more room left for prices to move down. As far as copper is concerned, we are expecting copper prices to move down and touch levels of around 425 rupees in next 1 week to 10 days time horizon. So I would be a seller in copper at around 436, 437 rupees, which is the current market price. For that, one should maintain a stop loss of around 442 rupees on higher side. And on downside, one can expect targets of around 431. And if price are able to break and give close below 431, then further sell-off can be seen till 425 rupees. The other commodity where we see good sell-off is lead. Lead has given a breakout. I think lead should give a correction till 112 rupees in MCX. So present levels or on rise in prices till 118 in MCX should be used as selling opportunity. For that, one should maintain a stop loss of around 121.50 on higher side for the downside target of 112 rupees in next 4 to 5 days.
Vijay, what's your sense coming in for the base metal prices? Which one are you picking up on?
Manisha, I'm waiting and watching industrial metals because I think they've fallen pretty sharply. Although I'm not really ruling out further declines from here, but either zinc goes to 102 levels, lead goes another 2 rupees from here. Copper, unless I get it at say 430 odd levels, I would not venture out a buy. And at this point in time, I'm a little unclear about shorting them also.